Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Windtree Therapeutics. It seems they've hit a bit of turbulence, more like a strong headwind actually, and the possibility of being grounded is looking more and more real. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Windtree is a biopharmaceutical company focused on developing therapies for respiratory diseases. The report we're looking at centers around a problem with their stock price and warnings from the stock market. So what's up with Windtree? Well, on June 18, 2025, they got a letter from the Nasdaq stock exchange telling them that their stock price has been too low for too long, basically. Nasdaq requires companies listed on their exchange to maintain a minimum closing bid price of $1 per share. Windtree hasn't been able to keep its price above that level for 30 consecutive business days, which is a problem. Think of it like this. If a store consistently sells items below cost, it's going to get a warning from its suppliers. In this case, Nasdaq is the supplier and Windtree's stock price is the item that's not meeting the required value. Now, usually when a company gets this kind of warning, they get a grace period, usually 180 days, to get their stock price back up above $1. But Windtree's situation is a bit more complicated because they had some previous issues with stock splits. To understand why Windtree doesn't get the standard grace period, we need to talk about discretionary panel monitor and reverse stock splits. Previously, Windtree went through 2 reverse stock splits, meaning they reduced the number of outstanding shares to artificially raise the price of the stock because of those past actions. The Nasdaq listing rules don't give them the automatic extension, and there's an additional layer of watchfulness by a listing panel. This is like a store trying to boost its sales by marking up the prices of goods after lowering supply. If they do that too many times over a short timer period, the store will come under increased scrutiny. Windtree did these stock splits with such a ratio that the Nasdaq is being extra careful. What happens next? Windtree has the option to request a hearing with a hearings panel. If they do that by June 25, 2025, it puts a pause on any suspension or delisting actions. It buys them time to explain their plan to get back on track. Windtree intends to ask for a panel hearing, so they're fighting to stay on the exchange. This is like the store owner explaining to the supplier a plan to increase sales and revenue, so things get back on track. For now, Windtree's stock will continue to trade on the Nasdaq capital market under the ticker symbol WINT. It's important to understand that getting this letter doesn't immediately mean they're kicked off the exchange. They're in a sort of limbo waiting to see if they can convince the panel to give them more time. This story reminds me of a high-stakes poker game where Windtree is betting that it can pull off a turnaround before the clock runs out. The report was signed off by Jed Latkin, President and CEO to now. Stepping back and looking at Windtree's situation, what does it all mean? The company is in a tough spot. It's fighting to stay listed on the Nasdaq, which is important for investor confidence and attracting capital. Low stock price and the Nasdaq warning makes it harder for them to raise money, which could impact their ability to develop new therapies. The most notable risk is definitely the potential delisting. If they're kicked off the Nasdaq, it could trigger a sell-off of shares, further depressing the stock price. Also, it will make it hard for people who hold the company shares to trade them. The key opportunities hinge around any positive developments in their drug pipeline and new approved therapies. If they can announce positive results from clinical trials or get approval for a new drug, it could boost their stock price and help them regain compliance with Nasdaq requirements. In conclusion, Windtree Therapeutics is facing a serious challenge. They need to convince the Nasdaq panel that they have a credible plan to raise their stock price and demonstrate their long-term viability. So don't forget to check out the Discord in the description for more in-depth discussions. Thanks for watching and see you next time. What's your take on these events and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more in-depth discussions. Thanks for watching and see you next time.